The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody on the East Coast, and good morning to our colleagues and friends on the West Coast. My name is Jennifer Schaus, and I'm founder and principal of Jennifer Schaus and Associates in Washington, D.C. Our firm helps companies that are selling products and services to the government. And today we've got Jeff Padawar from DCAA Assist with us, who's going to be running the webinar. It is recorded, and we will have time at the end for questions and answers. So right now we will we'll begin the webinar, DCAA Audits, Get the Facts. The agenda for today will go through some brief introductions. Jeffrey Padawar will make the presentation, and as I mentioned, we'll have time to take your questions and answers at the end. Some of the partners that helped us out with the promotion of the webinar include FedBidSpeed and Fierce Government. FedBidSpeed is a software program that helps you manage your government opportunities. So if on a regular basis you're jumping onto sites such as FedBizOps and you find an RFP within there that your organization wanted to bid on, FedBidSpeed allows you to kind of manage that opportunity, assign proposal writers within your team, and kind of and share the workload for that solicitation. So it's a great tool to use, and I encourage you perhaps after the webinar to jump onto their site and take a look at what they have. Another one of our partners that helped us out with this webinar today is Fierce Government. They provide a free government newsletter. They even have a Fierce Gov IT section that focuses on cyber and security. They provide white papers and events. It's a great publication. It comes to you daily, and I think if you compare it to the other newsletters that are out there in the government sector, you'll find that these guys really they provide a high-quality service. DCAA Assist is run by Jeffrey Padawar. His company, well, he is a CPA and provides services helping with the DCAA audits, implementation of different software programs, including QuickBooks, and all of the other services listed there. My organization, as I mentioned, is based in Washington, D.C. Our primary focus is on the GSA schedule. We also do have partners and team members that help with federal sales and marketing and other B2G components such as 8A certification, security and facility clearances, lobbying, state and local government, and a host of other services, some of which will be featured either in upcoming webinars or ones that we've had in the past. If you are in the Washington, D.C. area or happen to be in Washington on March 19th, we've got a Government Contractors Networking event that we host at the Kennedy Center. Small Business Administration has confirmed their attendance, and they will be addressing the audience on different services that SBA has available for government contractors. So I encourage you to attend that. Okay, I will now turn the audio over to Jeff, and he will kind of dig in here on the DCAA audits and kind of what you guys came to hear. Take it away, Jeff.
Thank you, Jennifer. I appreciate the opportunity to speak with the audience, and I just want to acknowledge what a great job you're doing bringing this kind of information into the marketplace. So let's talk about DCAA very briefly. I want to focus principally on what a pre-award audit looks like, but were you to have the opportunity to bid on or be awarded a cost reimbursement type contract under a broad agency announcement or under the SBIR Phase 1, Phase 2 programs, then you would be ultimately evaluated by DCAA prior to winning that award. And the checklist and action plan that DCAA auditors follow is referred to as the SF, or Standard Form 1408. Previous styles of this form were issued as a 15, but recently they have modified the form to be roughly 4 or 5 areas of concentration, but it's still basically 15 points that you need to understand so that you can self-assess your accounting system for compliance and or seek the assistance of professionals like myself to make sure that the accounting system does what it needs to do. So the first of the points is generally accepted accounting principles. You must start with an accounting system which is double entry, not a spreadsheet, but a double entry accounting system which conforms with GAAP. That would suggest accrual accounting, matching principle, which means that costs and revenues are in the same accounting period, the use of the accounts receivable and accounts payable ledgers rather than a cash-based system where you're simply writing checks to vendors or depositing remittances from customers. So a full GAAP accounting system is accrual, matching, accounts receivable, accounts payable, including evidence of monthly reconciliations for bank accounts and or credit cards that you may use. Next slide's great, thanks. So we'll just move right through this. The accounting system must provide for all of these various elements. So the first thing, of course, you need to do is as you record transactions, whether it's labor or vendor purchases or independent contractor consultants, you have to be able to segregate direct costs from indirect costs. And one way that we demonstrate that to DCAA is by having an intelligently organized chart of accounts and accompanying policies and procedures which clearly delineate the elements of each of the cost pools, whether they be direct or indirect. Secondly, if a cost is direct for a cost reimbursement or fixed price or time and material contract, that you have to have a way of identifying direct costs associated with that contract, with that customer, or with that CLIN, which is a contract line item number, and or at a task order level. So using QuickBooks as an example, you would have a customer master for the customer, and then you would have a job or a contract, and then in the service item master you would be able to create CLINs and or task orders so that vendor purchases and or payroll, hours and dollars, could be accumulated in these buckets. The next one, C, is you have to have a consistent and intelligent method of allocating indirect costs. So generally you may appreciate that there are fringe costs, overhead costs, G&A costs. You might have material handling or subcontractor costs. Depending on the complexity of business and operations and accounting structure, indirect costs have to be grouped into intelligent pools so that they can be accumulated for computing indirect rates. Excellent. So moving on, the accounting system is still providing for accumulation of costs under general ledger control. This is where DCAA says we're looking for a double entry accounting system, not a shoebox or sticky notes or spreadsheets. And they want to make sure that there is a general ledger and cost ledger, meaning job costing for individual contracts that are reconciled frequently and represent the full operations of the business. Then we move on to labor capture. So a timekeeping system, of course, is key in a government contracting environment, most specifically time and material and, of course, cost reimbursement. Many smaller customers and clients of mine might use analog or pre-printed physical time cards, but these days many people are migrating into very competitive and cost-effective digital time card solutions, many of which integrate directly with QuickBooks. So ideally, you can get your employees to fill out digital time cards through a web portal, and then with a mouse click solution, import all of that time and labor information directly into a software program like QuickBooks, and then from QuickBooks be able to also process all the hours or convert all the hours into dollars, and then prepare the payroll, which would be fully distributed to your direct and indirect labor categories. The next item down, F, a labor distribution system. Pardon me if we just go back a moment.
Sorry.
That's quite fine. The labor distribution is basically saying I've taken hours for direct costs by contract, by CLIN, by task order, indirect costs for G&A wages, overhead wages, paid time off, and other activities like internal research and development and or bid and proposal activities, and I can convert those hours, whether I'm using an analog or digital timekeeping system, into dollars at an effective hourly rate of pay so that government contracts are billed appropriately. Thank you. Routine posting of books to account simply means that you're using your accounting system on a frequent and routine basis. You don't want to be running an accounting system with spreadsheets or sticky notes and then get around to posting things, let's say in your accounting system, let's say QuickBooks, every 2 weeks or every month. So DCAA wants to see evidence that your accounting system is being used on a routine transaction basis. The next item is a significant one for cost reimbursement contracts and the computation of indirect rates, which is the exclusion of FAR 31.205 unallowable costs. Now, many of you may be familiar with these listings of unallowable costs. Many of them are quite specific and clear. A handful of them are more difficult to identify. You have to go through kind of a wizard process to see whether your particular cost structure is unallowable or not. But of course there are copious resources from DCAA itself and other sources so that you can begin an education in understanding what unallowable costs are, make sure that they are identified and excluded from your indirect cost pools so that you don't compromise your rates or overbilling on government contracts. And to prove these to DCAA, we include them in the policies and procedures and routine training and evaluation to make sure that we're doing this correctly. Identification of costs by contract line item simply reinvents what we've spoken about before, which is that you need an accounting structure that can accommodate customer, contract, CLIN, line item number, and task order. Then item J, which is not that relevant to most small businesses or emerging businesses, is the segregation of pre-production costs, and that has to do principally with manufacturing kinds of contracts where prior to the contract beginning, preparatory costs must be incurred and should only be done so with the permission, written permission from the CO prior to them being incurred. Let's move on. Very good. So now we're on to number 3, which is accounting system provides these levels of financial information. Limitation of costs, whether it's FAR 232.20 or 216.16, has to do with providing the contracting officer with a specific letter that says you've reached a 75% spend level on a cost reimbursement contract. And in order to know that, you have to take your original cost budget, compare it to your actual costs, which are both cumulative and periodic, until you see that you've reached the 75% spend level for a specific ACRN or funding pool. At that time, under a cost reimbursement contract, you have to advise the contracting officer you have enough funds to complete the contract or whether you may require additional funds to complete the contract. For item C, requests for progress payments, we use a specific tool in a QuickBooks and other accounting environments referred to as the voucher master, which satisfies the limitation of cost requirement, the contract brief requirement, the summary in a single spreadsheet for cumulative costs and periodic costs, meaning voucher by voucher, and the comparison of your budget to actual reporting so that you can see how far you've come along under a specific funding pool. That's a very important tool that we use for both passing audits and for managing cost reimbursement contracts in the field. Item 4 basically says that your accounting system is organized in some manner, whether it's budgeting or historical accounting information, the computation of indirect rates using the DCAA ICE or ICE model for computing indirect rates, and that you are doing things homogeneously and consistently across the board for proposal by proposal and or new opportunities that you may have under a contract extension. And the last item is that before DCAA will actually come to see you, you would fill out, they would ask you to fill out, whether it's under IDIQ or directly from DCAA or both, an SF 1408 self-assessment checklist and narrative, which is a new item that DCAA intelligently is putting into the marketplace. So if you fill out that form correctly and intelligently, representing that your accounting system is indeed capable of cost reimbursement contracting, then they will make an appointment to come and see you once they've been asked by the contracting officer to evaluate your accounting system. If the 1408 self-assessment checklist that you fill out and send back to DCAA is deficient, or the narrative does not represent your working knowledge of how to manage government contracts under a cost reimbursement environment, they will simply kick it back to you, ask you to get further information, education, and support before they would be willing to come and see you, which does save DCAA and the government a lot of money, because they're not going to see clients in the field that are actually not prepared to receive them and have their accounting systems evaluated. Next, please.
Bear with me.
Sure. I'm just waiting for the refresh. Okay, applause. I can't hear it, but I'm sure you're applauding fervently at your various desktops.
Great. Thanks, Jeff. That was very informative, and looks like we do have some questions coming in. So I'll read them off to you. And
Great.
Just to remind everybody that yes, this webinar is being recorded. It will be available probably early part of next week, and that would include the audio as well as slides. Okay, the first question is, what about uncompensated overtime?
Great. Uncompensated overtime occurs when a salaried person works more than 40 hours a week. In other words, they're not being remunerated for hours in excess of 40. So an accounting system must accommodate uncompensated overtime so that the effective rate of pay for a particular payroll cycle is used to compute the labor dollars appropriate to all of the labor categories that someone may have worked. So if a salaried person works 40, 50, or 55 hours a week, their effective hourly rate for that payroll cycle actually declines, right? It becomes less than their annual salary divided by 52 weeks at 40 hours. So the accounting system must be designed to allocate the effective hourly rate times the hours they worked for each of the labor categories that they charge time to, so that a government contract is not being charged $60 an hour when the individual was actually only paid $52 an hour for that payroll cycle.
Okay, next question here says, what if my company uses an outside payroll service?
When using an outside payroll service rather than an integrated payroll service within your specific accounting system, we have to then use some combination of a labor distribution report which accumulates the time cards, computes the effective hourly rate of pay, which I mentioned a moment ago, and then through journal entry records the payroll as gross payroll in the accounting system, including, of course, employer payroll taxes and making accommodation for any voluntary deductions or other payroll types. So when using a third-party payroll system, there are several different solutions we can use to make sure that the journal entry recorded in the accounting system reflects the effective rate of pay for everyone's time card for that period.
Okay. How do you invoice cost-type contracts in QuickBooks?
Yes, great question. So I made mention earlier of the Voucher Master. The Voucher Master is a tool which accumulates all direct costs for a contract, whether it's labor, materials, ODCs, subcontractor costs, or travel, and then applies the provisional indirect rate that would have been negotiated when the proposal was issued. So if my overhead rate is, let's say, 60% and I've got a fringe rate of 24% and a G&A rate of 10, then those rates would be applied to the direct costs within the Voucher Master to arrive at a fully populated voucher amount, which could then be entered into the accounting system as a single lump sum. More expensive and sometimes hard to use accounting systems in the marketplace have indirect rate accommodations built in. the lion's share of my clients, and of course many small businesses throughout the country using QuickBooks, we have to deploy the Voucher Master as an intermediate spreadsheet to apply indirect rates and come up with the appropriate voucher amount. And this is perfectly satisfactory to DCAA in every engagement I've been involved in.
Okay. Next question says, is the ICE or ICE model easy to use?
ICE can be rather complicated for the novice. The basic structure is you have to go to a setup screen to tell the ICE model what your direct and indirect cost pools are, so that it knows how to structure itself to accommodate a G&A pool, an overhead pool, a fringe pool, whether intermediate or a claimed rate, and or a subcontractor or material handling pool. I mean, there are some manufacturing companies with multiple divisions and disciplines that might have upwards of 12 indirect cost pools, though that's more the exception than the rule. For the smaller government contractor, usually a fringe rate could be allocated up to overhead and G&A, so you would end up with a relatively simple dual rate system, an overhead rate and a G&A rate, which means further in the ICE document you have to use Schedule B populated with your G&A pool, Schedule C populated with your overhead pool. There's a separate tab in the fringe model for, in the ICE model for your fringe costs, and then all of your direct costs of labor, materials, ODCs, travel, and subs goes into Schedule H. And once those predominant schedules are prepared intelligently from your accounting system, whether it's a direct link or whether it's a copy and paste, you will be able to compute and defend intelligently prepared indirect rates.
Okay. We've got another question here. After a DCAA audit, if you do not pass, will you have an opportunity to get them to approve your system?
Yes. I often work with clients that prior to engaging me do it alone. And because the DCAA audit can be very tricky and very detailed and very succinct, people without experience having gone through that process don't know that they need to cross the T's and dot the I's in many specific levels with respect to policies and procedures and other elements. So it is common that a contractor that doesn't have experience or doesn't avail themselves of services that I provide will fail the audit for one or several deficiencies. Then DCAA issues what they call a COTR, which is a Statement of Conditions and Recommendations, which outlines their deficiency findings and then makes recommendations how they can and should be corrected. Then I will be called in often after a COTR is issued to assist a client respond to it appropriately and intelligently based on the kind of narrative and verbiage that DCAA is looking for, implement the changes to the accounting system, and then respond to the COTR and be able to, whether it's weeks later or a month or so later, demonstrate that the accounting system has indeed been corrected. Then the contracting officer will ask DCAA to come back and see the client so that they can respond to and demonstrate all the corrections that have been made. And usually on that second visit, we are successful in passing the audit and then permitting the contracting officer to move forward with a cost reimbursement award. Under very rare circumstances, and it does happen unfortunately, that an accounting system can be found deficient twice. And in that case, you can turn, a small company can turn to the SBA and seek a financial capability audit from the SBA, Small Business Administration, and issue their report to the contracting officer that will be able to issue a cost reimbursement contract specific to that contract based on a successful audit and review finding from the SBA. But most often, my passing rate on working with clients with DCAA is over 99% on the first audit visit. Occasionally something slips through the cracks, or something is just not accommodated, or you have a very aggressive or assertive auditor that is for whatever reason, looking to make an example of you somehow. This does happen. It's unfortunate, but it does happen. And when it happens, we simply have to respond to the audit findings without getting excited, defending our position intelligently, implementing the recommendations, and then passing the audit on the next go-around.
Okay. I guess it helps to greet the auditor with some coffee and donuts. Next question here. Can a company respond to a cost-plus solicitation if they do not have an approved system?
Yes, absolutely, with one exception. If you are acting as a prime, responding to a cost reimbursement solicitation, you do not need to have, nor will you likely have, a DCAA-approved accounting system. And the contracting officers and DCAA are well aware of this fact. So you shouldn't let the fact that you are, let's say, new or early to the cost reimbursement game not bid on cost reimbursement opportunities. Now, the caveat is this. If you are a subcontractor to a prime, that prime may impose upon you the necessity of having a DCAA acceptable accounting system before they will permit you to issue a proposal up to the prime on a cost type contract. However, the workaround there is that a CPA such as myself, experienced in the field of FAR regulations, can do or conduct an SF 1408 audit, examine, review, tighten up the accounting system so that it meets all the criteria, and then issue a favorable certification on my letterhead that oftentimes prime contractors will accept as sufficient intermediate evidence that a subcontractor meets all of the FAR requirements for bidding on cost reimbursement contracts. But it's not until you enter a relationship with the government as a prime under a cost reimbursement opportunity that DCAA will come to see you. They will not come to see you based on your request. They are deployed by the contracting officer.
Great. Okay. Is it your conclusion that QuickBooks, along with policies and procedures, can pass DCAA review?
24/7. I do it week in and week out.
If you're currently on cash basis, do you have to convert over to accrual, or do you just have that capability in your accounting system?
You had better be able to literally convert to an accrual-based accounting system prior to DCAA's visit. If you can't demonstrate some number of months of functioning with accounts receivable, accounts payable, the matching principal, and meaningful payroll accruals, you are not likely to pass their examination.
Okay. This one you may have touched on with SBA. The question reads, can you get financial capability audit from SBA before you fail a DCAA audit?
No. Again, the SBAA will not execute such an audit engagement with you unless they are also specifically requested by the contracting officer. So it's not a self-serve relationship.
Okay. How does all of this apply to fixed price work, if at all?
Great. It does apply in this regard. If your accounting system is not intelligently organized and you do participate in firm fixed price engagements, it becomes very difficult for you to assess the profitability of that firm fixed price commitment. If we can't figure out a comparison of our actual direct costs and our applicable indirect costs to the firm fixed price engagement, it becomes impossible to assess its profitability and whether we priced it in the most advantageous manner for the company. DCAA is not compelled or will not be asked to evaluate your system under a firm fixed price arrangement, but by and large, the sooner that the accounting system is organized in an expert manner to accommodate cost reimbursement accounting, the contractor is in much better position to self-assess the profitability and what the market will bear with respect to future firm fixed price opportunities.
Okay. Next question reads, how does an audit work if you have public and private clients and cost plus and firm fixed price contracts?
Great question. The audit works exactly the same way. Whether you have a mix of government and or commercial customers, you should still be using your general ledger, your direct and indirect cost pools, and your job costing to accumulate labor and other costs associated with your relationships, whether they're commercial relationships or government contract relationships. And if you have a mix of firm fixed time and material and or cost reimbursement, the same fundamental accounting system and intelligence permits you to have a system that will accommodate any mix of customers or contract types.
Great. Can you suggest somewhere to go to look at an example of a chart of accounts that breaks out direct and indirect costs?
Yes, sure. You can email me and I can provide you with some rudimentary resources so you can appreciate what that would look like.
Great. And are the findings of the DCAA audits available on public websites or not?
No, they're not. As a matter of fact, it's sometimes difficult to get the DCAA report from your contracting officer. DCAA will not issue their audit report to the contractor that they've reviewed. In order for you to get a copy of the report, you have to solicit it, and sometimes assertively and repetitively, from the contracting officer so that you can get a copy of a favorable DCAA report for your records. If DCAA finds you deficient, the SOCR, the Statement of Conditions and Recommendations, will certainly be issued to you so that you can respond to it. But a final audit report, whether favorable or unfavorable, gets sent only to the contracting officer, is not a matter of public record, and you have to solicit the contracting officer to get a copy of it for yourself.
Great. I get the same question with the GSA schedule audits, and those are also private.
Understood.
The next question, the government has a range that it finds acceptable for profitability. Obviously, the profitability is higher for private clients. Is it okay to make higher profits on these clients, or do they really focus on the profitability for the federal government clients?
Great question. You, as the business owner and manager, are in control of profitability values with respect to commercial and government contracts, and they do not have to be the same with respect to the computation or application of indirect rates for commercial relationships, or even within the government relationship. You can have a different fully burdened rate structure for firm fixed price and time and material contracts based on your relationship with the contracting officer and the guidelines that that particular issuer has in mind. When it comes to cost reimbursement contracts, those are fully transparent, meaning you bill at your actual costs and then apply fringe, overhead, G&A, and profit on top. And that's how DCAA will evaluate the efficacy and defensibility of your indirect rates. And annually, you have the obligation to file the incurred cost proposal using DCAA's incurred cost electronic spreadsheet, ideally, so that you can compare the rates that you used to bill the contract to the actual rates that you incurred once the accounting period or year came to a close. And a contractor has to be very careful that they are not billing a cost reimbursement contract at indirect rates above what their actual rates are during the accounting cycle. So it is expected of the contractor to keep an eye on their indirect rates throughout the accounting cycle, no less frequently than quarterly, ideally monthly. And that's done very simply using, let's say, a trial balance and the ICE model to evaluate your actual rates in comparison to the provisional rates that you're using to bill the contract.
Great. Okay. The next question. On June 6, 1997, the CASB issued a final rule amending 9903.201-1B6 to exempt from the requirements of CAS firm fixed price and fixed price with economic price adjustments, provided that price adjustments is not based on actual costs incurred, contracts and subcontracts from the acquisition of commercial items. This exemption was effective July 29, 1996, with issuance of an interim rule. What is the impact of the following exception relating to commercial items?
Wow.
That's all that?
Yeah. Thanks for that. That's the kind of question that I think is more germane to work out privately rather than in an audience of this size, since it's more technically related. And I would have to do some more research to see how it's germane to your environment to answer it intelligently. So forgive me or give me the opportunity to pass on that one.
Okay. Have you found that QuickBooks for Mac provides same functionality discussed today and via access on iPad?
Yeah, that's great. I wouldn't recommend it. And the reason I don't recommend it is because QuickBooks for Mac does not have the same full feature set that QuickBooks for Windows does. And since I'm a strong proponent of integrated timekeeping and payroll, QuickBooks for Mac simply will not accommodate that kind of integration. So while I respect the Mac environment and everything that it can do, when it comes to QuickBooks accounting systems, I insist that all my clients, even the ones that are operating successfully in a Mac environment, dedicate a Windows PC for their QuickBooks desktop version. This assures me that we can accomplish remote access and third-party tools such as digital timekeeping and payroll in a smooth environment.
Great. Thanks, Jeff. And it looks like that is the last ever questions for today. Again, the audio and the slides will be available. This session is being recorded. We do have other webinars coming up. March 6th, surety bonds in government contracting. March 11th, SBIRs. March 13th, facility clearances. March 27th, joint ventures and teaming agreements. April 2nd, leveraging FOIA requests for your capture strategy. And again, keep in mind our Business to Government networking event March 19th at the Kennedy Center. Jeff's contact information is here on the last slide, so if you need anything specific, please feel free to reach out to him. And if there's anything further that I can help you out with, my contact information is there as well. Jeff, any last words?
Thank you so much. I'm glad to be able to address the audience. Too bad I couldn't hear or see any of them. I hope that the presentation was succinct and valuable to them. Jennifer, I appreciate all the work you're doing.
Great. Thanks, everybody. Have a super weekend, and the audio and the slides will be available early part of next week. Thank you.
Thank you.